Alright, so hi guys, welcome to the mid-month watch list review. So what I do in the mid-month is I talk a bit about the update about the market mid-month, and then I run through the stocks in my priority watch list. So let's begin by looking at what's been happening to the markets so far middle of the month. Now if you recall, at the start of the month, I did show you the historical chart that during midterm election years like this year, August and September are historically weak months, bearish months. And then October, November will then see a strong rally towards the end of the year. However, you can see that August has actually been pretty strong. If you look at the S&P 500 ETF, like the SPY, which I'm using as a proxy, you can see that the market in the last few days, it has rallied very strongly, consolidated and rallying very strongly. So, why is it so strong when usually August is weak? Well, there are two reasons. The first reason is because going into August, the market expected that the Federal Reserve was going to raise interest rates in September. There was like a 70% or 80% chance of a rate hike. But then that's what the market expected. But because we had weak employment data, which ironically you think that weak employment data is bearish, right? But the market sees it as bullish because when the labor market is weak, that tells you that the Fed will unlikely raise interest rates. They have to hold or maybe even cut interest rates. So the moment the employment data came out weak, the chance of a rate hike in September from 70% has now dropped to, I think, 30%, below 40%. So that has given fuel for the market to go higher because the Fed is not going to raise interest rates. Okay. The second reason is because the earnings season has just finished. And if you have been looking at most of the companies, the earnings result was much better than expected. In fact, on aggregate, the S&P 500 is reporting earnings, I think, if I'm not wrong, more than 50% above expectations. So strong earnings, interest rates not being raised, that has given fuel for the market to go higher. And that's why I keep saying that, never try to predict the market. If people try to predict the market, August is going to go down, and they short the market or they got out of the market, too bad, so sad, market goes up. Okay. So never predict the market. No one can predict the market. All we do is what? Stay invested in good companies and ride the ups and downs. And of course, if the price of our good companies drop for what kind of reasons, we use that as an opportunity to add shares as long as the reasons do not affect the long-term economic mode of the business. And 99% of the time when the stock of a good company drops, they are always short-term reasons. Most of the time they are purely sentiment, they are emotional, they are not really fundamental most of the time. Okay, so let's look at the S&P 500 a bit closer. And again, the way to read it is, are we on an uptrend or downtrend? On an uptrend, right? So the 20 EMA, the red dotted line above the 40 EMA, when the red dotted line above the blue dotted line, short-term trend is up. When the 50 moving average, the blue line above the green line, 50 above 150, the medium-term trend is up. And of course, the 200-day moving average in red is sloping up. So the market is in a very strong uptrend. And those of you who don't know how to read moving averages, it's all covered in the Whale Investor course, it's covered in the Wealth Academy Investor Masterclass, it's covered in the price action manipulation stock trading program, it's covered in the options program. All the programs cover technical analysis. So this is basic stuff, right? And for those of you who are, accumulating the S&P 500 ETF, for the benefit of you guys who are doing it, I'm not doing it obviously because I don't buy the index because my job is to beat the index. But for people who are buying the index, they want to know what are the support levels to add, right? So, well, if you look at the long-term 10-year monthly candle, you can see that, again, this 50 moving average is a very strong support, right? Whenever there's a big crash, it hits the 50, doing, right? So this blue line is a strong support during bear markets, right? So that's why the first support level is at the blue line at 548. So if the market crashes, it will tend to bounce off that blue line. So that's the first support level, or the last support level, if you will. Then the next support level at 604 is at this blue dotted line. You can see this blue dotted line also acts as a support. Hits the line, doing, right? So these are where a support level is where the price will potentially bottom and reverse because of historical support, telling you that the buyers are waiting there to buy. And the next support is at the 20 EMA on the monthly candles. As you can see, the red dotted line. During a shallow pullback, it tends to bounce off the 20, right? So next support at 672. And this last support is drawn on the weekly candles. If I go to the weekly candles, you can see here, it coincides with the 20 bounce, right? So this is where price tends to reverse. So hence we've got 4 support levels: 735, 672, 604, and 548. Yeah. So again, as always, if an investor is adding shares, they want to wait for a wave down, right? So wait for a wave up, wave down, could add here, wave up, wave down, add here, wave up, wave down, add here, wave up, wave down, add here, add here. Now it's waving up, so no more adding. Yeah. And of course, for those of you who are non-US residents, of course, the ETF we use is not SPY. We use CSPX for non-US people, because CSPX is listed on the London Stock Exchange and it's domiciled in Ireland. It's an Irish domicile ETF that tracks the S&P 500. And the advantage of this one is there's no estate tax risk. So if you die suddenly, the US government will not tax you 40% because it's listed on London, domiciled in Ireland. And the withholding tax on dividends is 15% versus 30% on the SPY. But of course, we don't buy these stuff for dividends. This is for capital gain. For dividends, we buy other stuff, right? Okay, great. So that's an overview of the market. So let's take a look at the watch list stocks. So these are stocks on the watch list, means that I don't mind buying it. I may buy it in the future. Some of them I've bought it, but I sold it at a profit. I don't mind buying it back. So this is the priority watch list. So as long as it's on the priority watch list, tells you that it's a high quality business. So the first is Exxon. I've never owned Exxon, and I don't mind owning Exxon. It's a very high quality business. Trouble is that it's always been overvalued, and it's still overvalued. You can see that it made a correction here, but still overpriced. Intrinsic value 293.95, where I would add 273, 228, and 173. So still overvalued. Berkshire. Now, I did mention a few months ago. Now, for those of you who are new to UIP, let me just mention it to you. So Berkshire Hathaway, as you know, Buffett has retired, taken over by Greg Abel. And if you ask me, will Berkshire outperform the S&P 500 in the next 5-10 years? I don't know, and I think there's a very low chance. I think there's a low chance it can beat the S&P. So I'm not looking to buy Berkshire as a way to beat the S&P. The only reason it's in a watch list is because I think it's a good alternative proxy to holding cash. So it's kind of like a cash plus account, if you will, because Berkshire, about 40% of their market capitalization is in cash. They hold in T-bills, and the rest of them, they hold a diversified portfolio. And Berkshire is one of those where if and as and when there's a AI bubble crash, where will the money go to? You go to Berkshire, right? So it's kind of like a hedge against the AI bubble crash. But I'm not buying it directly, because if I buy directly, my money's not growing very much. So what I've been doing is I've been selling cash secured puts on Berkshire, which I have, and I closed it for profit. But if it gets cheap enough, if it gets really undervalued, I don't mind adding a bit, again, more as a cash position. It won't beat the S&P, right? But you'll beat cash. That's what I'm saying, okay? So intrinsic value 497, support levels 486, 470, 437, and 406. Next, Cadence Design. Cadence is part of the semiconductor group. So, it's a great business, but again, it's not my first priority to add, sorry, because I already have a lot of exposure to semiconductors, yeah. Intrinsic value 223, support levels 221, 192, and 138. So it's currently overvalued, and Berkshire overvalued as well, but it did get undervalued here, and that's why I sold the cash secure put. And then when it bounced up, I closed the put for my profits. Next, we look at Domino's Pizza. So Domino's Pizza, McDonald's, Yum Brands, same family, fast food. And I used to own all three. I sold them at a nice profit. I've not bought them back. I don't mind buying them back, but they're not my priority because they're not very high growth, But if they're very cheap, I don't mind adding it. But the point is, I already have a lot of stocks in my portfolio, so it's really not my priority to add it. But it's in the watch list because they are high quality. Okay. So for Domino's Pizza, reduction in the intrinsic value from 421 is reduced to 383 because of lower projected growth. Okay. But it's still undervalued despite lower growth. Support levels 368, 332, and 285. So again, it is within a buy zone, but I've got no intention to buy any of the fast food restaurants because I'm diverting my funds to higher growth businesses or more defensive businesses, if you will. Next, GE Aerospace. Now, among all the watch list stocks, if you ask me, Adam, if there's one you really want, this is the one. This is the one I really want, GE Aerospace. And there's a deep dive research done on it a few months ago. Do watch the deep dive research to understand why I love this company so much, because it's got a very strong economic moat. Okay, so anything, I want to buy this one. And intrinsic value increased from 208 to 290. Okay, so quite significant increase in intrinsic value because they've done very well in terms of their results and projections, but still overvalued. Yeah, support levels 268, 210, and 159. So I'm watching this one to buy. Okay, next, McDonald's. Like I said, unlikely I'm going to buy any of the fast food unless it gets really cheap. Intrinsic value 273. It's currently at the fair value. Support levels 265, 246, and 232. Moody's Corporation. So Moody's, very similar to what I already own. I already own MSCI. I own S&P Global, which are financial analytics companies. Moody's is another one of them. So Moody's and S&P Global, they are like an oligopoly. Okay? So not my priority to add because I already have S&P Global, but I don't mind buying if it gets very cheap. And for stocks, I don't mind buying. I play hard to get. I sell cash secured puts to earn premium. And if I get assigned the shares, I don't mind holding it, right? So for Moody's, intrinsic value 467, currently overvalued. Support levels 449, 402, and 370. Monster Beverage. This is one of my regrets. I used to own this. I sold it. I put it all in Celsius, and then Celsius didn't work out. What to do? But anyway, I sold it for profit, small profit, right? And it kept going up. So, we can't win them all, yeah? But it's still there. Now it's overvalued. Intrinsic value 32.69. Support levels $30, 0.1, 27.73, and 23.56. NASDAQ. So NASDAQ, also a very high quality business. I don't mind owning it. Only reason I don't is I already have a lot of stocks and I own Intercontinental Exchange. So this is kind of like a competitor to Intercontinental Exchange, just as strong. In fact, I would say they're equally as strong. So it's one of those where, I'll buy it if it gets cheap enough, sell puts along the way, but now it's already overvalued again. So I sold the put when it was below here, went up, and I closed the put for profit. For those of you who have no idea what are puts, you can learn it in the options trading course where we teach about how to make money by selling options regularly. Yeah, as you guys know, I don't buy options. Buying options is for losers. Losers buy options. I sell options to losers who buy options. Okay. Support levels 83.88, 76.97, and 69.72. NUKZ, this is the nuclear ETF. It's an ETF, so there's no intrinsic value, and it's higher risk because most nuclear companies are not profitable, or if they are very overpriced. So it's one of those where, I've been playing hard to get, I've been selling puts, but I've not really bought it yet. It dropped to this second support level. I could have bought it here actually. I could have bought it, but I sold the put. Now it went up. I closed the put. And again, only reason I'm not buying it is because I've been diverting my funds to my existing stocks. My priority is to always add to existing stocks than to buy something new, unless there's something new is so great. Okay, so support level 69, 24, 61, 71, 56, 82, and 52, 21. Finally, Yum Brands, which is the last fast food, retrace here, but still overvalued. Intrinsic value 137, support levels 134, 131, 128, and 124. Okay, so that's it. That concludes the watch list review for the month of August. Half the month is over. Markets up quite a bit. We'll see how it goes. Thank you for listening, and may the markets be with you.